Welcome, ladies and gentlemen. This is Andrew here with your business breakdown, giving you the best business news in the past week. So to start off with, we have the red hot IPO markets. So this started with DoorDash. DoorDash had their IPO coming out. They were originally priced in the range between $90 and $95, which was pretty high as it was. But then it actually came out late Tuesday with the price of $102 a share for their IPO, their initial public offering. Well, on the debut, the stock shot up 86% and just amazed everybody with what it was doing. And it was $182 a share at one point. So that was an incredible return on the first day of trading, right? If anybody was able to actually get in at that IPO price. So if you're taking a look at this, they were looking to raise around like $3.36 billion at a valuation of $32 billion market cap, right? This company's only 7 years old. DoorDash was started in California, and basically now with the pandemic going on, they really took control of the food delivery market. Right now they have about 50% of the food delivery industry marketplace. So they better watch out because they could start getting some antitrust action from the government if they get too crazy with it. But if you look at what happened after this IPO and where the stock's trading at now, it now has a higher market capitalization than several other food companies such as Chipotle Mexican Grill, Domino's, and Dunkin' brands combined. All of those combined don't equal what people are paying now for DoorDash. So it's pretty crazy when you're seeing this jump and a lot of speculative action in these IPO prices, especially at the tail end of 2020 here. Speaking of that, even more recently, we had Airbnb, which we talked about in previous videos. They had their IPO, and this was big news as well because a lot of people were anticipating this one for a long time. And when you look at it, this company was founded in 2008, and it's been significantly growing. It's part of the new gig economy right now, so same thing as the likes of Uber and Lyft, where you don't really have a standard company with employees. You basically have contractors that operate on the business model that you create. So this company was worth, a crazy amount going into this, but they don't really make that much money, right? They had their IPO, they priced it at $68 a share. Okay, so sounded like that made sense. But then it came out on the IPO day and doubled. At one point it hit $146 a share, so it more than doubled. Keep in mind, this company has never had a profitable full year in, like over 10 years of being around, 12 years. So that's pretty crazy that it can shoot up this much, right? And if you compare this to other hotel companies, which I understand that they're a new innovative business model compared to standard hotel companies, but they are competing in the same industry. Well, the market capitalization, which hit $100 billion at one point here when the stock was shooting up, that would make them worth more than Hilton, Marriott, and Hyatt hotels combined. All of those companies wouldn't equal the market cap of this one now because of this crazy IPO situation. And although it's good where people can make a lot of money going into these IPOs if they're able to get in on the offering or trade them in the secondary market, the problem is that you look at some of the news around this in particular, and it sounds like there's a lot of crazy speculation that's going on here that doesn't make for kind of sound investments. So one of these was that people wanted to invest in Airbnb so bad, a lot of retail investors, they went and started buying stock options. But they didn't get stock options on just any company. They went and they saw in pre-market trading a company called ABB. Sounds like Airbnb, right? So they bought these stock options and actually drove up the price of those stock options like crazy. Turns out ABB is not Airbnb, which didn't even have their IPO yet. Those options were for a construction and engineering company. And people were so excited about this IPO, but they literally bought another company's stock thinking it was this one and drove up the price of that, or at least the price of the stock options on it. So I thought that was pretty crazy right there. If you look at the actual financials of Airbnb, they don't really own any assets, right? Because people are using their homes and they're basically renting that out to other people like they were a hotel. So the company itself doesn't have that much in assets. It used to be about an $18 billion company a few months ago. Now all of a sudden they have an IPO and they're worth $100 billion? That's pretty crazy too. Then if you look at, okay, what are they doing now in terms of their growth and how are things going for them? traditionally they have third quarter is their best time to make a profit. And they usually make a profit in the third quarter each year. But for the full year, they do not make profits. And actually, the losses have been increasing recently. The loss in 2019 was worse than the previous 4 years combined. That's for 2019. Okay, so we're in 2020. What are they doing now? Well, we're on track for 2020 to be twice as bad as the losses from 2019. So again, not looking great. And then if you look at a graph of the reservations in the United States on Airbnb, it's pretty much a trending downward line there and has been declining since 2016. So you have 4 years, potentially going into 5 years of declining reservations. The company was able to cut costs recently around the pandemic, and they kind of shifted their focus. People were doing kind of staycations or vacations where it was close to home and they would rent Airbnbs. So they were able to turn a profit in a recent quarter. But to be able to be profitable for the year is going to be very difficult for them. They're on track right now to lose between $700 and $900 million just in 2020. So it's crazy that people are willing to just pony up all of their money for a company that is doing nothing but bleeding red in terms of their balance sheet. So looking at the overall craziness in the IPO market, I could probably do a whole nother video on this, but the totals in 2020 were $155 billion in capital raised on US exchanges from these IPOs. So this is way past the previous record that was set back in 1999. And remember, 1999 through 2001 was the period where you had like the dot-com bubble and burst. So that was a very crazy time in the markets, right? So if you're looking at historical data, Airbnb was the 19th company that actually doubled on its first day, on its debut as an IPO. So if you're looking back to the bust of 2000, there were 77 companies that doubled in their first day of trading. In 1999, that number was 117. So this record in 2020, with this being the 19th, is the best in 20 years, going back to around 2000, when there were 77 companies that doubled on their debut. So I thought that was pretty interesting as well, because you're seeing other indications that the market is getting very high and valuations are getting really crazy right now. Next up, we have some of the vaccine news, right? So we had Britain already distributing vaccine to their people right there. And then there was the warning about the people that have asthma or severe allergies maybe should not take the vaccine right now. But we also got an approval from the FDA, emergency approval on the Pfizer and BionTech vaccine. So this is one of the two main vaccines in the United States, and they finally gave the approval. 17 voted for, 4 voted against it, and 1 abstained on this one. And this is a big deal because most of the people that voted against it said it was only because there weren't enough trials on people under the age of 18 for the, I think it was 16 and 17-year-olds. They did a smaller trial, and that was the only reason they voted no. So between the efficacy of the drug and working against, I think it was 90 or 95% of the times, and then on top of that, you have the vote for the emergency approval here, we're going to start getting those vaccines into the environment. Now, looking at this, Pfizer's stock has not really moved much on all of this news in 2020 about the vaccine, right? So if you look at another company which is making another alternative vaccine, Moderna, their stock, I think it was trading at $5 a share or something like that, and it's now 150 or something. So why has that one gone up a crazy proportion, whereas Pfizer, which is a very large company and has other business areas that can bring up or down the stock in the company, why is one doing so much better than the other? It's kind of interesting there to do a deep dive analysis on what's causing that. And also looking at some of the other companies that are trying to do the vaccines as well, the whole pharmaceutical sector. Next up, we have some information from China, which is one of the first ones to come out of this kind of vaccine, or I guess I should say like lockdowns from the pandemic. And Russia and China were doing very experimental vaccines on their people without really doing clinical trials on it. Well, they're coming out of this pandemic with exports being up 21% in November. That was crazy because the increase was only expected to be 12%. So they're seeing crazy growth right now on the tail end of the pandemic. Does that mean that Western economies, the United States and others, are also going to fare very well coming out of this? That's food for thought right there. So the trade surplus that they had was $75.42 billion. So that was a new record for them as well. Then, if you're looking at the top trading partners for China, well, US is number 3 on that. And we make up about 46% of the trading from them. So it's pretty crazy there when you're looking at that. I mean, I'm sorry, they had the totals were up 46% for the US for the year, but we're the 3rd largest trading partner with them. I think their number ones are the East Asian nations. There's like a group called there. And then 2 is Europe, the Eurozone, which is 19 countries in Europe. So if you're looking at all these numbers, it's pretty crazy that they're going up so much. They're at 55% of the year-to-date targets, though, for buying United States grain and agricultural products, which was something in the trade deal. They were supposed to buy hundreds of thousands of dollars worth of these agricultural products from the United States, and we only have a couple weeks left in 2020, and they're only at 55% of the target. So once again, you see these kind of trade deals with they say nice things, and there's no repercussions if you don't meet those targets. So nothing's really going to happen to that. They're just not going to meet the target and not buy as much from the United States as they previously stated they would. Next up, we have Tesla news, of course, because Tesla's in the news every week. Right now, they just announced that they're going to, from time to time, they're going to sell shares to raise $5 billion in capital, just, whenever they feel like it. And because the market is so crazy right now, and the dilution of shares doesn't seem to be scaring any investors away from these companies, the stock sold off a little bit, but really not significantly. If you look at it, the company's up 677% just for 2020 right now. And it's actually the 6th largest company in the United States. It's behind, it just surpassed Warren Buffett's Berkshire Hathaway. And now it's behind like Microsoft and Apple and Facebook and Google and those companies, right? So Elon Musk, the CEO of the company, also announced that he is moving out of California, which we are seeing a giant trend. It's going to be interesting to see at the end of the year when you get some data on how many people left California. You're seeing a lot of big celebrities, a lot of everyday people moving from California to other more affordable locations. I could probably do a whole separate explanation or a video describing that as well. But yeah, so he's moving to Austin, Texas, which is now been a very big hotspot where a lot of these big companies or tech companies are going, kind of like the second Silicon Valley. So looking at Tesla itself, they are supposed to double their capital expenditures in the next 2 years. So they need this capital raise that they were talking about here because they are spending money they're spending money in Germany and Berlin, and they're spending it in Austin, Texas, and California. They're doing all these different productions, so they need that. And it's only about 1% or less dilution of the company, so it's not that significant, right? Looking also at this, one of the most searched terms on Google was Tesla stock reaching record highs. So you can understand right now how the marketplace is accepting this kind of news when you have one of the top search terms about Google stock, right? About Tesla stock. Apple, another big company, they announced new headphones that are over-the-ear headphones, right? But the problem is that they're going to cost $549. And they have they bought the competing brand Beats from Dr. Dre. And that had the same kind of like the Beats over-ear headphones. And those are what, $300, $350? So they're going to compete with themselves here with something that's priced way above the market. So I don't know what kind of additions it can have that can make it better than all these other noise-canceling kind of headphones and stuff like that. But we'll see how the market takes it. Next up, we have Greenwich LifeSciences. So this one was crazy. So this was a $5 stock for years and years, right? And you see this sometimes with these pharmaceutical companies or healthcare companies. They get one big news and it kind of changes everything. This is a Texas-based pharmaceutical company. And they came out with this poster presentation of 5-year data for the GP2 clinical trial. And they found out that this drug met all of its endpoints and showed 0 recurrence of breast cancer in patients who had previously undergone surgery. So this is a breakthrough drug right here, breakthrough treatment. And the stock, which went public, I forget the exact time on that. But if you look at it, it went from $5.75 on the IPO to trading at around $56 now. So that's pretty crazy on that. It's up over 300% on this news here. So a company that has gone from like seemingly nothing, nobody pays attention to it, to becoming in the headlines and just jumping just because of this one drug and what it has the potential to do. So they actually halted trading on this because it was moving so much after the news. The normal volume was 22,000 shares traded a day, which is nothing, which is one trade on these bigger companies. It jumped to 8.5 million on the day that this news came out. So I like to show that one there just for the innovation in this industry here. And you can see how one company that can focus a lot of time, energy, and effort on this one drug, and if it's a breakthrough, it can completely change the outlook for the company. Next up, we have General Electric. So General Electric years ago had a big problem with their insurance portion or insurance business unit, which lost a ton of money during the 2008 crisis, right? The mortgage crisis. They had to set aside a lot of money for the insurance and the reinsurance. And what happened was the SEC filed a suit against GE claiming they misled investors. So now they are being fined $200 million by the SEC for doing this misleading of investors on how their power business was making money and also the risk of their insurance portfolio, which they kind of hid under the rug. It turns out that that insurance portfolio needed $15 billion in additional reserves to become stable. So it really crushed the company. And that was back, the company before 2008 was, I think at one point it was the largest company in the United States at like $350 billion. And now you have Apple and Google at, $1 or $2 trillion right now, but you look at that like 10 or 20 years ago and you can see it's pretty crazy how much things have changed. So it's interesting that they're actually going to get this lawsuit against them for kind of hiding their financial losses here, but we'll see how that plays out and if there's any other big announcements like that from the 2008 crisis that continue to come up. Next up, we have the power to the players, but I guess not the GameStop retail outlets because they're not doing so well. GameStop people thought they were going to start doing really well because the new consoles came out, the PlayStation 5 and the Xbox One X or whatever the heck name the Xbox X now I think it's called. So people were hoping this would bring back the stock, right? The stock they try to do all this kind of like restructuring and trying to see where they can go with the company. And it's been really struggling. It was at like $6 a share, okay? And now it's around $13 a share. So it kind of doubled since the lows. But now people were expecting a good quarter here. And it turns out that their revenue was actually down 30% in the third quarter. And year over year, they had less than $1 billion in revenue. So, I mean, that's pretty bad right there. They're just they're struggling here. Their whole business model is kind of like Blockbuster where it's just dying. They make money on selling pre-used, pre-played games. So now they were 7% short of estimates on this news, and that's why the stock has really hit a wall here. So the consoles actually came out a little bit too late and were in short supply, and it wasn't enough to boost the numbers. Maybe it can boost the numbers for the holiday season if enough consoles get out there. Right now, there's still a shortage of PlayStation 5s. And if you look, you're trading at, I think, 4 times the amount of price. Like if you had picked it up at your Target or your Walmart or something, or your GameStop, you could sell it on eBay right now for like $2,000. There was actually videos in the UK where people were doing Fast and Furious style raids, driving up behind trucks with their cars and trying to unlatch the truck, steal the PlayStation 5s out of them, and jump back into their car. It's pretty incredible. You should check out some videos of that if you want to see it. But you can see how crazy the things are getting with people reselling these products that are in short supply.